Welcome to this week's Dividend Cafe. My name is Brian Seitel. I'm a partner here at the Bahnsen Group. It's Thursday, September 22nd, about 2:30. And to kind of recap this week, we had sort of a slow start. Really the week that was focused on the Federal Reserve meeting that was going to have take place Wednesday. And so Monday and Tuesday in markets really quite slow. Market was down literally 4 points. Monday it was up 10 points. Wednesday, or I should say actually Tuesday night, we had news from Japan and their Bank of Japan, which is with their central bank policy being largely unchanged on what they're doing there as far as asset purchases. It's their version of quantitative easing, but announcing that they're now going to target a 0% 10-year government bond yield, which really hasn't been done before. And to put that in perspective, 10-year yields here in the U.S. are at about 1.62%. Japan is now at 0, and their efforts are really stimulate, try to get out of this sort of 3-decade-long deflationary environment that they've been in by any means that they can. And markets reacted favorably to that in Japan. Market was up about 2.5% or so in Japan there. Jury out on whether that'll be successful or not. It certainly hasn't been, for the last 3 years as they've enacted these sort of extreme measure policies, but we'll keep you posted there. Wednesday, about 11 or so our time, Janet Yellen and our central bank had their policy statement, and again it was more or less much to do about nothing. It's unchanged. Rates were left the same. We've got a range still of 25 to 50 basis points here in the U.S. They did lower some of their projections for GDP for this year in 2016, about 1.8%, and lowered it for the next two years, 2017 and 2018, 2% and just shy of 2%. So we're not looking at a real robust growth economy here either, really. And because of that, the Fed is on hold once again. So there was a little more dissension this go around. There were 3 Fed governors that voted against, that wanted to raise rates. And so I think that for the most part, going through December, most are looking at the December meeting, looking for the next rate hike, and that's where we are too. Volatility this week, we spoke about that a little last. It did pop up a little bit, but is back down. The VIX, or the volatility index, is back pretty close to the lows here. So things are really calming down. The markets are digesting the central bank news globally, and they're reacting favorably for the most part. Both bonds and stocks were up this week. Oil was up. It was kind of a week that really all asset classes moved together. Oil traded about 43.20 beginning of the week. It's closed today around 46.20, something like that. So a pretty decent move in oil. But that's a short wrap of the week. As always, we at the Bahnsen Group are here to field your questions and concerns. We love to hear from you, so please reach out. And we've got one more day tomorrow in the market, and then a nice weekend. I hope you enjoy it, and talk to you soon. Thank you.